At this price, is this a good deal for investors?
We call it a fair deal. It comes a bit below what we had initially expected, but we have to keep in mind this is a price that is supposed to reflect an acceptable price for Volkswagen, which is getting cash out of this transaction, but also an affordable price for Porsche SE. So there was going to be a certain amount of management of that price to make it acceptable for both parties. And I think this is a price that is definitely maybe below what could have happened in a traditional book build, where the interest in the stock is very, very high. But one of the buyers is of course motivated to keep it to a certain level to manage its own leverage.
Yeah, Philippe, you and I and Jeff and others have talked about eventually breaking up the VW stable, the Volkswagen stable, for many, many times as well. If I'm correct in saying, you're saying this is going to have a PE ratio of somewhere in the region of 16%, which sits beautifully juxtaposed between the horrendous PE of Aston Martin and the disaster that was the IPO there, and the terrific IPO of Ferrari, which still trades on 30-odd times. 16 times doesn't sound too toppy compared to that.
No, it's not. But if you look at the details of the margin, the returns on invested capital, you could summarize it by saying Porsche is half the Ferrari business. And it looks like it's going to trade at half the multiple, and that par looks fair.
Does this, and I know we're here to talk about Porsche, but does this start the process of the revaluation of Volkswagen's shares? Because it's by far the behemoth of the of the automakers that we're talking about as well. It's had a horrendous, I think last year it was down 23%. Race, which is of course the RIC for Ferrari, down 14%, Aston Martin down 70%, but I think we'll park that one elsewhere. So is this sort of a revaluation of VW, which trades at a paltry 4 times?
No, in short, no. Because they've owned that business, Porsche, for many, many years. We've known Porsche was worth that much. We just didn't have a price on the screen. And they are effectively, after the IPO, owning less of their best asset. And yes, they're getting some cash, but the cash is coming in to stabilize the balance sheet rather than strengthen it. And so there is no benefit to Volkswagen on this transaction. What the story is what you pointed out, is this the beginning of a gradual breakup of Volkswagen? Is Porsche SE going to stop there, or are they going to try to get Volkswagen to also separate more assets? That's where there is potentially value, but the IPO itself does not help the valuation of Volkswagen at all.
And Philippe, interesting that the red flag around governance and the lack of voting rights doesn't seem to be restraining interest.
Mm-hmm. Well, I think you have to kind of live with it in autos. Either there's a family or there's a state in pretty much every auto stock I can think of, with very few exceptions. And as an investor, your marginal voting right has no value. So yes, it is not ideal. Yes, I wish they had done something to improve that, but they haven't. And we've known about it for years. This is not incrementally negative. It's been the case for many, many decades, particularly at Volkswagen.